The housing market has been a hot topic in the UK for many years, and the current situation has many people worried about what the future may hold. Today, we'll be discussing the current state of the UK housing market and whether or not we are on the verge of another housing bubble. So, let's dive in and take a closer look. The price of homes in the UK has significantly dropped recently. Nationwide reports that the average UK property price dropped for the 5th consecutive month in January 2023. Many people have been left wondering whether the property bubble that occurred in the US back in 2008 is now beginning to rear its ugly head in the UK due to this reduction in prices. The fact that home prices are declining, mortgage rates are still rising. After skyrocketing in the wake of the mini-budget last September, some mortgage rates are already returning to normal ranges. The Bank of England claims that mortgage demand has reached an all-time low. Many people are now wondering why this is occurring and whether a housing bubble is actually about to burst. What exactly is a housing bubble then? A housing bubble occurs when home prices increase quickly to the point where they can no longer be supported. Several reasons, such as a rise in demand or increased loan availability, may be to blame for this. The bubble eventually bursts, which results in sharply falling home values and frequently severe financial turmoil. The majority of British estate brokers exude confidence, but they will be tensely awaiting the Bank of England's announcement at noon on Thursday regarding the next blow to the country's fast deteriorating real estate market. For a sector that has seemed to defy gravity for years, crunch time has arrived. According to the Halifax Bank, Threadneedle Street's Monetary Policy Committee (MPC) is prepared to increase official borrowing costs for the 10th meeting in a row, even though mortgage approvals are already 30% below their pre-pandemic levels, and home prices are down 4.3% from their peak in last August. The expectation among analysts is that house values will continue to decline through 2023, with one forecasting a peak-to-trough decline of more than 25% after inflation is included. On track to be one of those break years is this one. A protracted boom fueled by historically low interest rates has peaked. Even with historically low interest rates, it was inevitable that the celebration would come to an end sooner rather than later, as finding a down payment for a home and keeping up with mortgage payments got harder and harder. According to data released this week by the Halifax, a first-time buyer was spending just over £300,000 to climb on the housing ladder and required a deposit of £62,000. Last year, more than 60% of completed mortgage transactions were in combined names. However, since late 2021, official interest rates have been steadily rising, and the effects of Liz Truss's crunch time have arrived for a sector that for years has seemed to defy gravity, have also contributed to the sudden cooling in demand. According to Halifax Bank, Threadneedle Street's Monetary Policy Committee (MPC) is prepared to increase official borrowing costs for the 10th meeting in a row, even though mortgage approvals are already 30% below their pre-pandemic levels, and home prices are down 4.3% from their peak last August. As borrowers adapt to a period of consistently increasing interest rates, further declines are unavoidable. The city is preparing for a rate increase of 0.5 percentage point to 4%, and for the rate to stay at least this high until the bank is confident that inflation will sustainably reach its target of 2%. The consensus among analysts is that house values will continue to decline through 2023, with one forecasting a peak-to-trough decline of more than 25% after inflation is included. The UK has strict planning rules, a tax structure that encourages home ownership, and a steep decline in the amount of new homes being built since the 1950s and 60s. Yet, there are rare interruptions in the pattern. On track to be one of those break years is this one. A protracted boom fueled by historically low interest rates has peaked. The continuous rise in the official interest rates since late 2021 and the effects of Liz Truss's brief tenure as Prime Minister, which saw mortgage rates spike to almost 6%, have also contributed to the sudden cooling in demand. According to Capital Economics' Andrew Weishart, a property expert, the average quoted mortgage rates increased from 1.4% at the end of 2021 to a high of 5.7% in November of last year. At the end of the year, mortgage rates were probably still going to be slightly higher than 4.5%, even if Kwasi Kwarteng's budget impacts had somewhat worn off. The December RICS Housing Market Survey makes for sad reading in contrast to the recent spate of pleasantly positive news for the economy as a whole, Pickering said. The headline home price balance, which measures the difference between RICS members who believe prices are rising and falling, stood at negative 42% in December, down from negative 25.7% in November. This is the lowest monthly balance since October 2010 and the third largest annual decline since 1978. The biggest annual drop happened in the late 1980s before the early 1990s housing market crash and recession, while the second largest fall occurred during the global financial crisis in 2008. Although a housing market downturn was widely expected by economists, including us, the monthly drop in the December survey far exceeds our consensus's expectation, Pickering said. Due to people losing their jobs having to sell their homes in a down market, the early 1990s saw a doubling of unemployment, which prolonged and intensified the housing market slump. A repetition of the world-breaking repossessions is unlikely at the moment due to the low unemployment rate, but Weishart predicts that values will still drop significantly. It is obvious that there is uncertainty in the UK property market right now. Many people are unsure if we're about to have another housing bubble in light of the recent decline in home values and increase in mortgage rates. While some industry professionals hold this view, others contend that a bubble is not yet inevitable because the UK market is distinct from the American sector. Whatever the case, it's critical to keep a careful eye on events and to be knowledgeable about any potential hazards when purchasing or selling a home in the current market. Thanks for watching, and we'll see you in the next video.